Hello traders, sorry about the delay in getting started today. It's 8:04 a.m. Chicago time on Monday, the 7th of December 2020. This is episode number 1893 today. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Odd morning, just a lot to do, so I'm a little bit behind. Um, Here's where we stand market-wise. We've got mild risk off this morning. The S&P is down about 10 points at the time of this print, and allocation clearly to safety. Crude oil's off. The silver's off. Gold is holding steady at the plus 0.08. Remember, this sheet is published at 7:50 Central, 8:50 Eastern, so could have changed in the last 15 minutes. The dollar's up. The pound is getting pounded a little bit. Not quite. I just like saying that. Down 1.1%. Of course, Brexit is really pushing that currency around. We're seeing movement in the yen a little bit as well. And of course, the treasuries are getting inflows and are pushing higher with the 30-year bond up 17 ticks, and the 10-year note up 7.5 big ticks, 15 regular ticks. Eurobond up 57 ticks. Today, nothing on the calendar really, but here's what's important. What's important this morning is that U.S. is preparing new sanctions on Chinese officials over Hong Kong crackdown. That is top of mind. Also, the U.S. Congress is closing in on a COVID aid bill as funding deadline looms. And there's also the federal budget coming into play here. The president-elect, I guess, got his enough confirmations now, but President-elect Biden is moving forward with his cabinet, and the election issue is kind of moving off stage. The election, what is it? Contesting the election results is moving off stage. It looks like we'll have a smooth transition to the Biden administration, most likely. And so that's not in play much anymore. It's really about the stimulus in China as well as Brexit these days. So Wall Street futures were lower on heightened U.S.-China tensions, with Washington preparing new sanctions on Chinese officials. According to a Reuters report, Asian shares ended mostly in the red. European stocks dropped, pressured by concerns that Brexit talks could collapse. The British pound weakened the most in 3 months against the U.S. dollar. Gold prices fell on optimism over the week's COVID-19 vaccine rollout in Britain. Oil prices slipped on surging coronavirus cases. That's the summary from Refinitiv, which is by Thomson Reuters. I like to kind of get a recap from them. And that's where we stand. The current volume in the overnight session is 176,000, was 171 on print, versus 398, which is what we would consider to be the limit of normal. The overnight range is at 32.75, which is actually wider than we've seen lately. We've seen about 14, 17 points or so. Up to 50 points is within what we would consider normal, considering 252 days of range or an entire year. Overnight inventory is negative 41%. So 41% more short than long versus the closing price of Friday. Friday closed near highs on the pit session, and the profile today in the overnight session is multi-distribution, and that's where we stand. Really, it helps to pay attention to these numbers right here. These are updated on a weekly basis. the ranges, what we would consider to be the edge of normal or first standard deviation of ranges on 252 days. When it comes to the daily range, the S&P up to 58 points is considered within normal. 238 for the Nasdaq, 43 for the Russell, 463 for the Dow, and $1.60 for crude. The rotations are based on a 20-day look back on a 1-minute chart. We're looking at the first standard deviation, 6.25 points is considered normal, up to 6.25 points on a rotation on a 1 minute. That is a swing low to a swing high, or swing high to swing low. 6.25 points as well within range. That is inside of what is normal. And so that's where that's where kind of the noise is. For the Nasdaq's 25 points, the Russell 4.6 points, the Dow 50 points, and crude 18 ticks. That's where we stand statistically for the week. And so let's just move on now to the review segment. Friday really did not have high expectations. Friday, we were looking for a dip down into the 3668 area or so for a test of the extreme of the range, the overnight range, and the 2667 micro composite point of control. Is looking for a dip down and then a climb back up to 3680, and really mostly sideways. It was non-farm payroll Friday, and generally it's a snoozer recently. The secondary is a push up, pullback, consolidation, and then a rally towards 3,700, but did not expect it beyond the 3685 to 3690, really 3690. That's what was expected into Friday. Friday had a different plan, though. This is actually a PNF chart. Let's switch to a 4-tick Renko real quick here. Here's Friday. Starts right here. Friday, we could see an immediate push off the open. Very difficult to determine the opening swing high, which immediately flashes a caution shorts when we have a grind up. So this opening swing high is not very clear. It's not very firm. The market really was grinding up very slowly, and you could see that the first rotation was 15 points, and it went all the way up here before it had this big enough rotation in order to be registered as a big enough counter rotation to be registered as a rotation. Again, this is a caution on the short side when that happens, when it's not clear where, we would expect the market to open. Here's your opening price. We expect it to push down, push up, and then we are done. We get done early with the market on open orders. We establish a high, an intermediate high, or an early high and a low. This is not the same as an opening range. And then whatever the market does from there, we use the opening swing to determine how far the market had pushed or exceeded that opening swing. And then when you have a day where it opens and it just kind of grinds, it really starts to feed on itself as folks try to sell whatever levels they have and cover their shorts by buying, causing the market to push even higher. So, and that's kind of what happened Friday. We broke through the IB high, pulled back to VWAP. We did not test the mid at all on Friday. It was really a kind of a tough grind. The overall price action was bullish, so was the delta, and overall the up rotations far exceeded the down rotations, the pullbacks all the way through. So all in all, quite a bullish Friday. We tagged the 3,700 century figure before we sold off, and then the overnight session squeezed that even higher. Here's the overnight. The overnight session opens, squeezes higher immediately, gets to 37.05, and then from there we are the Asian session opens and we come back into balance. As you can see here, the point of control, we pull back into this area and we set up an overnight point of control really just below the point of control Friday, accepting these prices up at 36.89 and 36.90 before the Europeans came in. The Europeans came in and they were sellers immediately, just splashing it down. And then we've been walking this up since then. It's currently one-time framing up, and we are tangled up in the full session VWAP, full session mid, and the overnight point of control. So we are in balance coming into the open here, expecting a choppy open. And so that's where that stands. The last week did push. Did I reset this chart? Yes, I did. Good job. Last week, just to review on the daily, these gray boxes are, of course, the month. It's highlighting the month, which we don't really care about right now. We're still one-time framing up. Here we establish one-time framing. One-time framing up continues. Higher low, higher low, higher low last week. 2 weeks ago was an inside week. The week before last was a higher low with a break higher, pushing the 36.45.25 high, and then last week put in a higher low, higher high with a point of control that shifted us up even higher. That's at 36.67.50. You got to pay attention to this price coming into this week. That is the most. That's the most recent balance, and that's where we're playing. So as we push, hang on, as we push into this week, we still have a point of control that's well below at 35.57. That's kind of been there a while. There's quite a bit of volume in that area. It'll take a little bit to shift this up. The next area would shift up to is that big 36.08 before it even considers 36.67.50. So we are near all-time highs, despite the fact that we've pulled back a little bit from the 3700. We are really up against the all-time high, and don't forget that. So this is where that stands. What is going on with this trend line? We don't need it anymore. So that's the big picture. As you can see, last week actually performed really well when it came to delta. The delta, as we pushed higher here, as we pushed higher in this area, you can see delta was completely flat, poor participation. But last week we had a gap, we had a push higher, we had a gap up on Tuesday, and then we broke the one-time framing up on Wednesday, but then resumed on Thursday and Friday, and you could see the delta was participating there. The range, the daily range is falling, volume is falling, and that is typical of a rally. And so we have not given up any territory at all to the bears coming into this week's session. Looking at the order flow, this is CT Bookmap. You can find it at ctbookmap.pro. Looking at the order flow, very, very typical behavior up here against the 3700. Book is stacked above the inside market. This stuff is trading. This liquidity up here is trading, but we're against the century figure, a major price into the century figure, into the option strike, and overall, I'm not seeing a very clear picture in terms of order flow and the heat map so far. We see liquidity at 3,700 sitting up here a little bit. It's not very deep. We see some liquidity at 36.95, which is another option strike. And then we see liquidity down at the prior low, which held the overnight session. We defended, the ES defended the prior low, and we are squeezing ourselves back into the middle of the range. It is Monday, and I'm looking at a market that is really likely to be labored in terms of how it trades this morning. So let's look at what's expected for today. Turn on our stock zone levels. Here it is. So what are we looking for here? Today it is really it is really quite a choppy open. I'm expecting an open auction. I'm looking for the market to dip down into this 36. Oh, one thing I didn't point out, one thing I wanted to point out is right here. So this is the wrong chart to show this on, but I want to remind you that this is trading in boxes and ranges. Okay, so we have this right here as a box, and we are building a box up here, and we have a big box down below, down here. So we're kind of looking the ranges are very clear. So as we dip below 36.77, 78, as we dip below there, we start to move towards that 36.67. And we would be in this balance. If we do not hold this week, if we do not hold the low of this box, then we are 36.08 below, 36.08. If we do not hold that box, we breach 3600, and then 35.58 becomes the big area, and so on. So just pay attention to the big picture. Like, don't lose sight. It's important to pull up, let's see, it's important to pull up a long range map and look at what's going on in terms of how the market is trading. A half hour, 60 minutes is sufficient to show us what the market is looking to do. So if you look at RTH only, you'll find that we are moving from box to box to box. So for today, open auction, in range, in value, expecting it to dip down into the 36.86 and then 36.82. I'm looking for an impulse back up to the open. I'm looking for it to squeeze this high. This stock zone here is in play, 36.93, and to make another attempt at the 3700. Not really expecting the overnight range to be broken today. It's relatively wide for the current volatility, so I'm looking for a dip down, and then finally an impulse up that takes us to new highs, and then sideways. This is the main levels to contend with today are 82, as you can see here in the stock zones, 82, 78, and then below 78 we get into the next box below, and then above 3700, so the double O, and then of course the high 37.05, and then from there there's some measured move levels up there, but really just be patient today and look for your areas. Secondary open auction that squeezes higher, moves towards the 3700 very quickly, pokes through, impulse down, consolidate in the middle, and then come right back into Friday's balance and hold steady here at the weekly close, Friday's close, the overnight point of control, the day point of control of Friday. This is what I'm looking at. No gaps today, and we're holding right against all-time highs, so both sides have an incentive to act. Good luck today, and I'll catch you tomorrow morning. Take care.